Welcome back. You're watching Traders Corner, and joining me, as always, is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, tonight is an educational show. You won't be here by the time this airs, and it's going to be a very basic Traders Corner 101 kind of show, because we bandy a lot of terms about with great regularity and ease, but maybe not always giving cognizance to the fact that some of them are unfamiliar terms to people. So the two that we're going to focus on tonight are support and resistance.
Yeah, that's right. I get a lot of emails from people, and I think it's sometimes a reality check for me that we throw these terms around, technical terms which are everyday terms, jargon for us in the industry. Yeah. But you don't realize that sometimes the viewers out there, some of them don't understand all these terminology. And it's useful to actually go back to basics sometimes and have a look at what these simple terms mean and explain it. So that's what we're going to do on the show today. It's really basic, like you say, Traders Corner 101. And we're looking at support and resistance and just what it looks like. What constitutes support, what constitutes resistance, and how do you use these terms in your trading? Yeah. So we're going to look at 4 examples, 2 examples of support, 2 examples of resistance, and how you apply them. So the first type of support that we're going to look at is a rising trend support. And that's where you typically look for 2 things to be evident. One is that your 50-day moving average must be pointing upwards. Okay. Now, a 50-day moving average, what it really does is it takes the price close for the last 50 days and works out an average over the last 50 days. Mm-hmm. And then each day it adds a new data point to the series and chops the first day off the prior day's series. So effectively, you've got a constantly moving 50-day average, hence the name, a 50-day moving average. Yeah. I like the 50-day moving average as a indicator of medium-term trend, because 50 days worth of trade is approximately 2.5 months worth of trade. And what I find is that if you align your trade with the direction of your 50-day moving average, generally it improves your odds of success quite a bit. So in the case of a rising trend, you also want a 50-day moving average that is pointing upwards. The other thing is that your trend line must join at least 3 low points in the chart. And what you'll typically find is that buyers are evident at the lower end into what we term short-term weakness within an upward trend. So let's have a look at an example just to illustrate this point, because it's obviously easier to talk to a picture. Yeah, and so here's Capitec. This is probably the best example of a rising trend that we've got in our local market currently. And here you go. There's your uptrend, which goes back to the middle of last year. The numbers that I've pointed out there essentially indicate the number of times that this price has pulled back to that trend line. So you can see first back in June last year, then again in September, then again in October, and again in December. And a lot of people might not think of this so simply, but quite honestly, I ask you the question, what happens there at that point number 4, that the price stops there and then begins to turn higher? Yeah. And the answer is quite simple. I'm not the only guy drawing that trend line. Other market analysts will also be drawing that trend line, and we'll all say, hey, there's an uptrend there. And last time the price got to the uptrend, it bounced. There was support there. So therefore, it's probably going to do that again. And what happens is I go out and buy at that point number 4, and maybe you go out, and so does everyone else. And what happens? It becomes a self-fulfilling prophecy. Yeah. And suddenly you've got an uptrend intact. Okay. So those are a number of points that touch the significant lows. And as you can see more recently, that uptrend has begun to steepen, as indicated by the arrows over there. So you've got your primary uptrend, but then you've also got now a more intermediary uptrend, which is even steeper. And also notice how your 50-day moving average, which is that red line that I'm pointing out there, that's been pointing upwards the whole time. Yeah. So from a trading perspective, you've really wanted to be buying the dips in Capitec whilst it's in this rising trend environment.
I mean, it's always obvious to see this in hindsight because there can be a time when it breaks a support line, but I guess we'll talk about that at some point as well.
I think that's right, but when it breaks the support, then you've got to realize that the support has broken, and the saying goes, the trend is your friend until the bend at the end. And so when the bend at the end occurs, then you obviously have to change your mind. And that's why we have stop losses. Yeah. We give the trend the benefit of the doubt whilst it's intact. But when it changes, we have to go back to the drawing board, as it were.
Yeah. Okay, so this is an upward trend that you've been talking about.
That's an upward trend. So just to summarize, you've got to look for the 50-day moving average to be pointing up. The trend line must touch at least 3 points. And buyers typically come into the stock into short-term weakness within an uptrend.
Okay.
The next next type of support in terms of a bullish environment that we look at is lateral support.
Okay.
And in this case, what we're looking at is where prior highs, when they're broken to the upside, very often become support when the price pulls back to retest a prior high. And so the concept really is that prior resistance becomes support. And again, I want to illustrate the chart of Capitec, which is a nice example of this. And what I mean by this is, have a look there. Back in June, July last year, the price bumped up against some resistance. It eventually managed to push through that resistance. And then each time the price pulled back, what was previously resistance then became support, right? And it at the same time started to create new resistance back in August, September last year. It ultimately managed to break out through that lateral resistance, and then that level of resistance became support on the next pullback. You then got another trading range effectively where there was some resistance in the share price, and ultimately the price broke out through that resistance, and then that resistance became support on a pullback. And you can see the pattern repeats itself. Now we've been in a situation where the price recently broke above 1,300 Rand, which was resistance. And now, in all likelihood, we probably see it coming back and retesting that. And I would expect that that area, which was previously resistance, now probably becomes support into the next pullback. And the red and green arrows that I've shown there indicate the concept. The green arrows indicate where you've got support. The red arrows indicate resistance. And it's notable how what was previously resistance becomes support once the price is broken out through that resistance zone.
It also, though, applies to, you can't necessarily apply this to any share. It's got to be maybe a company with certain defining characteristics, like growing earnings or a fairly stable sort of earning stream. Companies that are maybe incredibly volatile, where there might be fundamental issues at play, wouldn't necessarily display these kind of characteristics, would they?
That's very true, but I'm also of the belief invariably that what you see in the chart usually is taking into account all those sort of fundamentals anyway. So it's a stock like Capitec exhibits all of those fundamental factors. It's growing its earnings, it's growing its customer base, etc., etc. So it stands to reason that you've got a rising share price.
Yeah.
And that won't be the case in all stocks, as we've seen on the JSE. There are a lot of stocks that have been falling in the opposite direction. And I guess that's where we come into the point now of talking about downtrends.
Okay.
And how do you identify a downtrend and how do you trade a stock that's in a downtrend? So here we're looking at the similar points to what we've done, but it all turned on
reverse, essentially.
It's all in reverse. So you've got a 50-day moving average that is pointing downwards. The trend must touch, again, at least 3 points, but now you're joining the highs in the case of a downtrend. And your sellers typically are evident into strength in a downward trend.
Okay.
So again, it's most easy to explain this using a picture and an example. So Sappi is a stock that's in a downtrend at the moment and has been since September of last year. And what you can see here again is your 50-day moving average, which is the red line there, that is pointing clearly downwards.
Yeah.
And you can see recently how every time the share price has pushed up into that 50-day moving average, it has encountered selling pressure and it's fallen away again.
Yes.
And there you can see the numerals indicate each time that this share price of Sappi has actually rallied to test the downtrend. And each time, sellers have become evident at a lower level, pushing that price down, and hence you get the downtrend. And again, like we said with the uptrend, you say to yourself, well, what causes this? And what causes it? Why did it stop there at point number 6 that I'm identifying there? Why did it stop there and then begin to fall? And the answer is quite simple. There's a whole bunch of people drawing that trend line. All of us see it. And we say to ourselves, well, the last 5 times that it got to that downtrend, it failed and it turned lower. So if it's probably going to do that again. So therefore, we'll either look to sell stock or go short and looking for another leg to the downside. And it becomes a self-fulfilling thing. And you respect that downtrend while it's intact. So again, at this point, number 7, I would probably look to short it for another leg to the downside until such time as the share price proves me wrong. But again, the trend is your friend until proven otherwise.
And then, okay, so that's downward resistance. What about lateral resistance? Because I suppose you've got lateral support, you can also have lateral resistance, right?
That's right. So lateral resistance is where the prior lows very often provide resistance into a rally.
Okay.
So you've got a share that makes a couple of lows, it falls below those lows, then any rally back up to those prior levels becomes resistance. And exactly that, prior support becomes resistance. So again, best illustrated with an example, and ShopRite is a nice example of this over the last year or so. There you have notice with ShopRite, it began to move lower from about March of 2018, and it's been in a steady downward trend ever since then. This area at around about 220 was previously a lateral support zone. You can see how the price held above that level, but eventually it broke down below 220, and then that what was previously support becomes resistance. Notice how the price bumped up against that level and couldn't get above it. And then it ultimately traded in a range for a while between about 205 and 220, and then eventually it broke down below that support, the 205 support, broke down below there, and then each time it rallied back to that prior, what was previously support, that had then become resistance on the rallies. So notice how it bumped up against 205 a few times but couldn't get above that area, and ultimately again formed a new trading range between 180 and 205. Eventually it broke down below 180, and that 180 Rand area now is resistance, and we've seen it bumping up against there in early March, and right now it's pushing up towards that area once again, and it's going to take some doing for this share price to push out above 180 Rand to break that resistance. So again, here you've got a situation where look at how the red arrows indicate resistance and the green arrows indicate support. And you can see clearly how what was previously support becomes resistance into a rally within a declining trend here.
I mean, Garth, as you say, these are two pretty basic concepts, but are they almost the fundamental building blocks on which you would draw maybe more complicated charts? I mean, if you only had a couple of technical pointers to use, would these be the ones that you refer to?
Yeah, very much so. I've often said to people on my courses, I said, if you told me you're not allowed to, you're only allowed to keep one technical indicator in your toolbox, and you've got to throw all the other ones away. What I would keep is the trend line that I can draw on a chart, be that a downtrend or an uptrend or a sideways trend like we've got on this one here, because that is the most basic element of technical analysis, but also the most important one and the one that you can glean the most use out of.
In other words, which direction is the stock headed?
That's it, exactly.
Up, down, or sideways.
Correct. And if you align yourself with the general direction of the trend, that's you're going to have half the battle won already.
Yeah, okay. Well, I mean, profound, basic, but important to know. And we're filling up a little library of educational shows, and they'll all be stored on your site. So good reference points for viewers. Garth, just to end off with a reminder that people can get a weekly alert from you. And of course, we'll be back next week with an update on our portfolio. Yeah,
that's it. So go to traderscorner.co.za, and in the middle of the page, you see a free weekly email link there. Sign up, register your details. It doesn't take long at all. And then what we'll do is every Tuesday we send you an email detailing the contents of what is coming up on the show each week. Yeah, and as I say, it's a good reference point to go and visit the site for other educational videos that we've recorded over the years, but we'll leave it there. Garth, thanks as always. Garth McKenzie is founder and editor of Traders Corner.